US is world's largest economy by GDP and the powerhouse of innovation and growth. So no wonder a lot of Indian investors want to buy stock of US companies and be part of this great economy. I believe that investing in the US stock market is a great idea, but it should be done only after making some very important considerations. In this session, we will discuss the 3 ways you can invest in the US stock market and all the important considerations you have to make before jumping in. Before moving ahead, if you are new to this channel, go ahead and hit that subscribe button. We are on a mission to make this channel India's biggest stock market library. With the help of animations, live trading, and practical case studies, we are trying to teach the most complex stock market concepts in most simple and effective way. Alright, so the first question we have to ask ourselves is why invest in USA when we have a thriving stock market in India? The biggest reason I believe is innovation and growth. The companies in United States are way ahead when it comes to technological innovation, and their emphasis on research and development keeps giving them competitive edge. Compare, for example, their technology companies from ours. I don't remember the last time I used a product or service from TCS or Infosys or Mindtree or any other Indian company. But I sure do have an iPad, a MacBook, a Facebook account, a Twitter account, and just this morning I got products delivered from Amazon. You see what I'm saying? US companies are clearly dominating the technology space. The second reason why the US companies are doing much better than ours is their geographical reach. While Indian companies are predominantly focused on Indian consumers, the US companies are reaching out around the globe to increase their customer base. This has significantly increased their growth potential and expansion capabilities. The third reason for looking outside India is diversification. By diversifying our investment in other countries, we are reducing the risk associated with Indian economy. For example, if there is a war or a natural calamity that slows down Indian economy for a few years, the investment in the United States still can continue to grow. As they say, don't put all your eggs in one basket. Okay, so by now we have made a very good case for investing in US. Now let's talk about how we can do it. The first method is by opening an overseas trading account through our domestic brokers. We can open these accounts through brokers such as Kotak Securities, ICICI Securities, Religare, etc. These brokers have tie-up with foreign brokers who in turn have access to the US market. For example, ICICI Securities has a tie-up with Saxo Bank through which they get access to the US market. The process of opening these accounts is a little tedious and requires a little bit more documentation and declarations. You can find the links to these brokers in the description below. Be aware though that there are certain limitations to these accounts. For example, you will not get any margins to trade just like you get in the Indian accounts. And you also don't have the capability of shorting. There is also a maximum limit to the amount of investment you can make, which goes to somewhere around 1.7 crores. But I think all these factors are not that significant. The bigger issue with opening an overseas trading account is the high cost of brokerage and high currency conversion charges. You basically have to pay a charge whenever you are converting your money from INR to USD and from USD back to INR. Now these charges may not look significant in the beginning, but they will quickly add up if you are an active investor. So please make sure you clearly understand these charges before opening an overseas trading account. The second method of investing in the US market is by directly opening accounts through international brokers such as Interactive Brokers, Charles Schwab, and TD Ameritrade. Interactive Brokers has an office in Mumbai, so you can directly call them to get information about these accounts. Their contact details are in the description below. Again, just like the first method, this method of investing is expensive and should only be done if you have clarity on the charges. The third and an indirect way of investing in the US market is to go through Indian mutual funds who are investing in the US market. These are some of those mutual funds. The benefit of this approach is that it's very simple. You don't have to deal with account opening charges, high transaction fees, currency conversion, etc. Also, these mutual funds are run by professional fund managers who have much better access to information about what's going on in the US economy than you and me. Similarly, you can invest in ETF such as Motilal Oswal's Nasdaq 100 fund. The link to all these options that are discussed above are provided in the description below. Do check them out. Now here is my advice. First is about overseas trading account versus mutual funds. You should be opening an overseas trading account only if you know exactly the shares of which company you need to buy, and that should be backed with solid analysis. But if you don't have that kind of clarity, then I think investing through mutual funds is a better idea. Number 2, don't get too fascinated by tech stocks. Just because you see everyone using their products or services doesn't mean that they are great investment opportunities. In fact, if you would have invested in Facebook in the beginning of 2018, by the end you would have lost about 30%. And same is the case with Apple, you would have lost about 15%. So, do extensive research before making any decision. Third, the cost involved. The cost involved in directly investing in US companies is considerably high. When you add up the brokerage, account charges, currency conversion charges, etc., I really wonder whether it's all worth it or not. Either way, you should not ignore them. Number fourth, taxes. Don't forget that if you invest directly in the United States through the overseas trading account, you will have to pay the taxes based on the tax rules in US. US considers any profit made within the first 3 years of investment as short-term gains and they are taxed at 20%. You will also have to disclose all these profits in your Indian income tax returns. Fifth, invest, don't trade. A lot of traders want to trade in the US stock market, and I think that's a really bad idea because the cost of brokerage, currency conversion, and the taxes are disproportionately high and they will eat into any profits you would make. Therefore, my advice is that you participate in the US stock market by investing, not trading. And my last advice is that don't put more than 10% of your capital in outside markets. See, diversification is a good idea, but sitting here in India, we don't know much about the US market as much as we think we do. So don't risk more than 10% of your capital in international markets because it is very hard to manage risk in international markets. Okay guys, this is it. If you have any questions regarding how to invest in the US stock market, ask them in the comment section below and we'll get back to you. And also, don't forget to subscribe.